The Aussie dollar has fallen about a cent this week, taking it to a 4-month low at 67 cents, solidifying its place as one of the weakest major currencies so far this year, with a decline of more than 4%. This week has been, of course, been all about the rapidly growing fears of the coronavirus and its impact on global growth. The initial hit to sales and output to China's economy is likely to be fairly severe as businesses close, inbound and outbound travel is restricted, operations are scaled back, and the movement of people is limited. Chinese cities are turning to ghost towns as the public isolate themselves in order to avoid infection. Confirmed cases of the virus are still rising sharply each day, so it's far too early to estimate the economic impact with any real precision. Chinese statistician does not release any monthly data on activity over this Lunar New Year period either. The longer-term impact of the virus will depend on whether we see a rapid containment or escalating contagion. But all we can say with confidence at this early stage is that the initial economic damage is already likely fairly substantial, dousing much of the optimism in early January around the US-China trade deal. A Chinese government economist said Wednesday this could see GDP growth fall from 6% to beneath 5% this quarter, but more precise forecasts are impossible to make. Supply chains for manufacturing across Asia are integrated, meaning that much of the region will also feel the impact as well, along with countries that have a heavy reliance on exports to China, such as Australia. Many markets are feeling the pain of the worsening coronavirus epidemic. Commodities have fallen sharply, with copper prices, for example, tumbling for 12 straight sessions, their longest retreat in more than 3 decades, while iron ore prices are down as well. Equities have slumped across the globe, especially in Northeast Asia, and interest rates have fallen sharply. By week's end, the World Health Organization declared the coronavirus a global health emergency, but they also suggested that efforts to contain the outbreak are robust, and they commended China's efforts to contain the disease, helping stabilise markets late in the week. Still, a raft of corporations are grappling with the expanding virus, and investor sentiment is decidedly negative. Turning to domestic developments, Australia's Q4 CPI was fractionally above expectations this week, supporting the case for the RBA to remain on hold at the upcoming meeting. Headline consumer price inflation picked up to 0.7% in Q4 last year, lifting the annual pace of inflation to 1.8% from 1.7%. That was a little bit above expectations, but that slightly stronger read mostly reflects temporary factors. For example, ongoing drought conditions boosted a range of food prices, while the rise in excise led to an 8.4% jump in the cost of tobacco. Beneath the hood, the key underlying measures, the trimmed mean, which excludes extreme moves and gives a better gauge of underlying price pressures, remains very well contained. Trimmed mean inflation was stable at 1.6% on the year. On that measure, the RBA has now comprehensively been missing its 2 to 3% inflation target for a number of years, and it's likely to continue to do so without a significantly tighter labour market and stronger private sector demand. That said, the modest firming in the headline pace, combined with last week's job data, which saw the unemployment rate fall to 5.1%, gives the RBA enough information to stay on hold at next week's policy meeting, their first for the year. Markets see it that way too, with the probability of a February rate cut priced into short-term interest rate markets hovering around 50% before the jobs and CPI data, but it is now down to around a 10% probability. The RBA talked optimistically about a gentle recovery, but the full cost of the bushfires is still being calculated. Australia's devastating bushfires, in our estimates, will lower GDP growth by around 0.2 to 0.5 percentage points in the immediately impacted fourth quarter of last year and the fourth quarter of this year. The Wuhan coronavirus poses a new threat to China and the global outlook, and then there's, of course, the still fragile state of the Australian consumer. In addition to the RBA board meeting Tuesday next week, Governor Lowe gives a speech on Wednesday titled "The Year Ahead" to the National Press Club in Sydney. This will be Governor Lowe's first opportunity to comment on the fires and the epidemic and give the bank's view on the 2020 outlook. The RBA releases their statement on monetary policy on Friday as well. Data on December building approvals, Australia's trade balance and retail sales round out the local calendar next week. Overseas, President Trump delivers his State of the Union address to a joint session of Congress. The 2020 Democratic presidential nomination process kicks into high gear with the Iowa caucus too. The Iowa caucus on the 3rd of February and the New Hampshire primary on the 11th of February will bring renewed scrutiny over US 2020 presidential election risks, especially if market-friendly centrists fare poorly. The US calendar includes the important US jobs data for January, and a raft of business surveys across the US, Europe and Asia are due. But coronavirus contagion fears and the economic disruption it could bring will likely continue to be the main talking point for markets. On that, some markets in China are set to reopen, and investors will be keenly watching to see how these markets trade initially, as well as being on the lookout for more clues about the economic disruption. We'll speak again next week.